So we're now looking way more for the traits and the personality profile than just the previous successes or failures.
Michael, hello.
So over the last 3 years, to recap a bit, we raised a total of 2 million euros from external investors.
What do you think is a great effect of builders?
It's how you hire people or partner with founders.
With how many entrepreneurs you've worked?
It's also really, really hard to find, I would say, the right entrepreneur with the right mindset. We've now had 3 companies go through the studio, as if 1 we exited and 2 we totally invalidated before you even saw the daylight.
Very happy to record this interview with you. Hi, my name is Max Pock. I'm an entrepreneur. I've built 3 companies. 1 I sold when I was 17 years old. Now I'm diving deep into the world of startup studios. I've published my big research on startup studios, and I invite founders to talk about challenges and successes of startup studios. Today my guest is Michael van Lier, a founder of Builders, Rotterdam-based startup studio. They started as a corporate venture studio maybe already 8 years ago, and then in 5 years they sold the company and switched to independent startup studio. Built 3 companies, and recently they had their exit of their portfolio company Influentials. So we talked with Michael about their playbook, about how to build a great brand of studio to attract many founders every day, every week and every month, getting hundreds of applications from potential entrepreneurs and residents, potential co-founders of startups, how they split their equity, how they invest money in startups. I found this very interesting because Michael is also a great author of Medium blog about startup studios. I've read it earlier and I refer to some of his articles in my Big Startup Studios research. Michael, hello on my podcast about startup studios. And let's talk. Can you tell about your story, starting with We Are Builders and then switching to Builders? So how you come up with the idea of venture studios?
Yeah, sure. So started a long time ago, right? I'm now an entrepreneur for 24 years. Started my first software company at age 16. And that company slowly grew out to be a software agency. And I think we ran that for 11 years. And we had some companies on the side as well. For example, a company doing cloud hosting to keep our own stuff online, which we built with the software agency, but also for other software agencies. By the way, that grew out to be a big hobby because it was like 3,800 clients at some point. So it was a very, big side company basically. But after 11 years of running that software agency, we got bored and we asked ourselves, why are we doing this? Are we creating the right impact, right? I just asked my engineers, and I had around 30 of them. I said, why are you doing what you're doing? The Simon Sinek question. And they said, Mike, we just want to create an impact and want to make sure that the software we build is used a lot, and changes the world. Basically what every engineer wants, right? Makes a lot of sense. And that made me change gears. So we then got away from building just the software platforms for, let's say, bigger companies and started saying, okay, impact is built on the front lines where the scale-ups are, where the innovation is, where the startups are, and first got involved there. So we started our company then called We Are Builders, and we decided to basically do what we do best, but then in an innovation environment. So we would help them build a better product and help them do better go-to-market. Turned out to be great. Was a bit less pay, but we had that impact and fun. I think the downside to it was, Max, is we figured out one thing really quickly. The company says they have 2 years of runway. It doesn't mean they have 2 years of runway. And after 6 months, most of these companies would be out, right? And they would say, hey, nice, Mike, but we cannot, afford to pay your invoices right now. But you wanted to make an impact, right? Of course, we said yes. And they asked us to invest capital. And we did, because we wanted to make that impact. I had the opportunity to work on the front lines of these companies again with the entire team, now working on several projects. But you know what? 6 months later, ran out of capital again. So we learned quickly that doing this as a business model is not how it should be. You should be way more in control, maybe even earlier, and like we do now, right? Starting at even pre-ID or founder with ID at that point, because later stage there's not a lot you can control. And we basically did all of those variations with that company, what's called Lier Builders. We learned is that if we want to do this, we got to work for corporates, right? They can afford us, so we did that, and on the side start working on a model how to build these companies ourselves. Which we then would be able to finance with the things we did there. I think we did that for 5 to 6 years, got involved with the studio ecosystem throughout those years, got to see a lot of, the bigger studios from the inside, like an ID Labs, PSL, whatever, the Beta Labs. We went all over the world to have an inside look there. And then I would say 2.7, 3 years ago, we sold that side company, that hosting company, for a good amount and decided to start an independent studio, stop the corporate services, put that capital in and start what now is Builders.
Mm-hmm. So it turned from an agency to corporate venture builder, and then you sold it, and now you started independent studio building for yourself and for customers in future of work and living. Yeah. Can you tell about your numbers? Like you recently had exit. Can you tell about it? How many companies are in your portfolio? What is the progress during this 3 years, probably?
Yeah, around 3 years. Yeah, I think first and foremost, throughout the years of our agency, I also partnered up with my co-founder to basically transition to this independent studio, right? So we're 2 founders in the studio, and we have a core team of around 6 to 7 full-timers. Everything one needs to validate and build a SaaS software company. Our scope, like you just said, for the future of work and living. We've now had 3 companies go through the studio, as if 1 we exited, and 2 we totally invalidated before you even saw the daylight. The first exit we just talked about, right, the bigger one, which made us finance Builders, has also been part of that studio journey, right? So what we did there is that, hey, this is a running company. We'll use our magic on it and see if we can create more value before we exit it, and that worked out really great. At this point in time, 2 companies operational, not spun out yet. And we now have 1 entrepreneur within the studio and planning to start with the next one within the next 2 months. So at any given time, we're planning 2 to 3 ERs, which we work with to validate our propositions. Of course, I cannot tell you about the exit valuations or, else we would have published those, Max, to the web. Mm-hmm. I can tell you that a lot of the capital from our first exit made us, start the studio and have the, capital to do so, because it's you need to kickstart it basically.
Can you tell about about your process, like how you choose this trending potential startups, or you just create them from scratch with entrepreneurs? Cover a bit, like what is your playbook, and from what it starts, how many months does it take to attract co-founder and then spin out company? If you had, so if I understood right, you just sold 1 company and you didn't make spin outs.
No, we sold it directly from the studio, actually. Right. So I can tell you about the process. So over the last 3 years, to recap a bit, we raised a total of 2 million euros from external investors and put in 1 million of our own capital. In those 3 years, I think most importantly, so we learned how to work with the entrepreneurs and what the best stage gate model is. We've always been fond of having, our playbooks and templates defined really well. I think, jokingly so, I think the industry knows us for our playbooks. In the beginning, and I think this is a important lesson for us, is in the beginning we would say we would go out to find the ER. we would most of the time find them based on an ID, thesis, or trend we believed in and hunt them down ourselves, keep contact, and then get some inbound, right? And overall, there will be 100 people inbound and 60 outbound in general, and then start, going down the funnel to find the right person to work with. To filter those out, we have a normal, I would say, recruiting process at first, but we would go really quickly into, all right, let's figure out who you are, behind the scenes. We would do psychometric test. We would ask the entrepreneur to present themselves in a pitch, and we would present ourselves in a pitch to really quickly go into, okay, what's the entrepreneurial side of things, right? And then, of course, look at the opportunity, compare to the founder if there's a fit on network, expertise, reach, whatever. From that point on, in the past, we would also pay the entrepreneur to be part of the studio and do the validation. You could say compensation, it's not, the high wages. And then to do the validation to a 3-step process will be problem validation, solution validation, and shaping. And I will go into that a bit later, before we would incorporate a company. And what we've learned from that is, even though it's good, it's also really, really hard to find, I would say, the right entrepreneur with the right mindset that also, needs payment. So what we changed there over the last, I would say, few quarters is that we now say, hey, we do problem and solution validation in a shorter time frame. That's around 4 weeks. We find these entrepreneurs mostly through inbound these days because our brand has, a presence that now works for us. We would ask them about their own IDs and present them our own and figure out through ideation which is the best to run with, which is the best founder market fit, basically. And within 4 weeks, we'll do a validation on that specific, I would say, ID, concrete business ID. Within the future of work, B2B SaaS, maybe some AI even to get there, right? And that process has been very beneficial for us and now gets us around, like I was just saying, a maximum, I would say, of 100 ERs inbound each week, which we go through. So that's the first part, validating that there's actually a problem worth solving. We would, after that, use a few more weeks to figure out if we could present a solution worth, buying, basically. If we would pass those gates, and they're eternal gates, right? We want to build the greatest company with that entrepreneur, but it needs to work. We need to see some movement, proof points that it's worth pursuing. After those problem and solution validation, we have something very unique, and we call that the shape phase. The shape phase is a 10-week, more or less, cycle where we would build a minimal viable company. It's not hard to imagine what that would be. There will be a mini brand, a name, a first MVP, but also, trying out some go-to-market strategies, signing the first 10 design partners / launching customers, and eventually also match and partner up with a CTO to actually start the company up with later. That shaping process is, I would say, an evolution of our model. It used not to be there. And the reason we did it is because we built companies before where we would incorporate before we would actually have the right traction, actually have the right proof points. Then the first day you incorporate, you're basically pivoting, and that's not something advisable. So that will be the process we take, right? And after shape, after we pass all the checks we believe a good company should have, we decide if we want to incorporate this company and finance it in 2 tranches to get it off the ground. And it's a bit different than most US studios, where a US studio would keep the company within the studio and spin it out and basically incorporate it once it got to a certain level. For us, that doesn't really make sense due to local legislations and stuff. So we incorporate the company there and then basically launch it. From that point on, the process is, I wouldn't say straightforward, but is focused on building the product, getting happy customers first and foremost. The studio would support with everything not CEO and CTO related. So think about anything, growth marketing, funding, finance, legal, let's say all the stuff there's no full-timer for, but also which is a bit tedious. And after finding those happy customers, building that product, we would focus on, getting them actual monthly recurring revenue in, till a point where we could get external funding on board. And for us, that means somewhere between 5 and 20K monthly recurring, and some actual traction and in a good market. That's the entire process. It's got a lot of gates in the stages to check ourselves and to check that we're not scaling prematurely, basically. Meaning, it's easy to build a humongous brand and have events and have the best thing in the world, but it's really hard to focus on the most important thing at that specific stage. So those gates, help everybody focus on first this.
Where in this line, first revenue, like first sale to the first customer, is it before incorporation?
Well, yeah, so let's call it a sale, right? We call them launching customers. So even before incorporation, we're looking to sign 10 of those. And a launching customer to us is somebody who actually has the problem, wants to solve it, is saying yes to a price point, and is also saying yes to weekly check-ins. Is that a sale? Well, I consider a sale something when you send an invoice and it's paid. So that would come a bit later. But within the first, let's say, 2 to 4 months after incorporation, we're actually sending out the invoices to see, who sticks, because not all launching customers stick.
So before the incorporation, what is the total period until you incorporate the company from ideation with entrepreneur?
Shortest time frame would be close to 20 weeks.
20
right?
weeks?
Yeah, and the first 10 weeks would be the problem solution. The next 10 weeks would be shaping. That's I would say, overall average. Could be done faster, but I don't think we could get it closer than 12 to 16. There's a lot of customer conversations within those validation and shaping gates and phases. And think about almost 100 conversations needs to happen before you actually incorporate that company, and that just takes a bit of time to understand the market thoroughly and get all the details right.
So when entrepreneurs join during the validation or ideation process, so are they full-time during this period? When they start to get salary and when they go full-time, so what is average benchmark?
So we expect the ERs, right? Let's say the future founders, the future CEOs, we expect them to be committed full-time from day one for those 20 weeks. And within those 20 weeks, we would slowly go up to a compensation. But it starts out with no compensation at all. So let's say best case scenario, it's 2 to 4 months the ER invests. But you have to also realize on the other end the value we're adding as a studio. So for example, in the shape phase, we're adding the entire team of 6 to 7 people to build that mini brand as well. So it's actually a pretty costly investment from the studio side. So we ask the ER to also, invest some of his own time to get there.
So they already have some money that they are able to go full time for several months, then getting revenue. What is the profile of those entrepreneurs who succeed partnering with you?
I'd like to keep talking about those learnings here, right? So we started out focused on 3 kind of profiles. I would say second time founder, which, very clearly, second in command would be a commercial CCO, COO, who wants to become the CEO of something. And lastly would be a product manager. What we've actually learned is that that's a bit too narrow. So we now went for a more just entrepreneurial profile. Somebody with entrepreneurial background, with the right grit, with the right mindset and the ability to convert the idea into reality. So we're not specifically aiming for second-time founders anymore, although I'd like them a lot.
When you say second-time founder, you mean founders who previously had exits?
Not specifically. So yes, founders who had success, but also founders who failed or just stopped. The experience there is that they kind of understand the urgency. Right? That could come from success, but also from failure. And I feel that's the hardest part of entrepreneurship, and especially with a studio, because as you know, the stats say, when you build a company with a studio, you can do it basically twice as fast as you'll do it on your own. Spoiler alert, that basically means is that the sense of urgency for the entrepreneur needs to be on point and needs to iterate really quickly. So that doesn't come with every founder or product manager, but does come with some other profiles. So we're now looking way more for the traits and the personality profile than just the previous successes or failures. And that works out great.
I remember your how to say this picture with different points. Like, do people have all necessary traits in their character? Sounds like this.
Yeah. So look, it's how you hire people or partner with founders. Is that we've learned not to look at their resume as a skill set. We've also learned to look at their personality and the things they basically get energy from. And we use that psychometric scan you just referred to as a way to figure out in which parts of company building and which skills you need, like deciding or adapting or executing, which you naturally are energized from. And there is a very specific profile that an entrepreneur has that will make that work, right? I'm not saying those other profiles are not entrepreneurial or cannot be a founder, but to work together with a studio, there's a specific set that works really well for us. So that scan is something we always do. And also the results of those scans we also share amongst all the ERs we scan, but they can also see our own scans, right? Who is Michael? Who's my co-founder, Sharon? And figure out, okay, so this is who they are for that reason. It's very helpful. And I'm hoping to build a bigger data set, to get better at the partnering with the ER.
Is it your own methodology how to test people, or you just use other tests? I just want to know what is the name of the test.
Yeah, we created it together with a company that used to call Fortify. I wouldn't say it's proprietary just for us. I would say it's part of a bigger process we created ourselves to make that work. Right, the scan is just a part of it. It's basically, I would say, double confirming what your gut says. Right, and if it's totally off, we've learned to ask more questions or not to partner. Right, so if your gut says this is this kind of person, but it's totally off, or the person disagrees with what it says, yeah, we basically shy away from it and tell them, okay, this is not going to work out.
With how many entrepreneurs you worked? Like, what is the funnel actually? Like, I understand that you get hundreds of applications. Then how many go to the next level? And finally, like, how many founders? Probably 6, maybe, if I right, maybe not. Who created companies with builders?
The funnel at this point in time is around 200 ERs at the top of the funnel per ER we actually partner with. So you can kind of get understanding of where we go with that. I think we speak to around 10% of that funnel. That feels about recent to get to that one ER. Within the studio, we've now worked extensively, I think, with 6 if you're excluding CTOs for a longer time. And of course, every company we incorporate, we also partner with a CTO, right? So that's a big part of the funnel as well. And for CTOs, it's a bit different. The CTO funnel is around 100 CTOs we talk to before we find a match with the CEO. And it's actually very interesting. CTOs are not easy to convince to join a startup. Right, they got options and they're looking at it most of the time in a bit a different way than a business co-founder / CEO would. So what we've learned to do is with that shape phase we discussed earlier, we've learned there to really go deep into, what's the founder story? What are we trying to build? What kind of CTO are we looking for in those 10 weeks? And then also create some sort of a pitch deck, which we would pitch, hey, this is what the ideal product and CTO would look like. And we've learned to do that to create a better match. So even that funnel going from 100 to 1 can be, more efficient. And those are basically the numbers to get to 1 ER. At this point in time, Builders is getting around, like I just said, 100 ERs a week. So we're slowly picking up the pace as well. And we've changed strategies from trying to build 1 to 2 companies a year now to trying to build 4 companies per year. And that sounds, like a step change, but it's also a change in how we work with, how much we finance with those companies, and also the end result we try to achieve. Yes, we're starting to work with a lot more ERs.
So you said like 6 CEOs. Does it mean that out of 6 companies, 3 actually are working and 3 you stopped or killed?
Yeah, there's 2, hard kills where I could show you what we call a post-mortem, right? So where we actually wrote a post-mortem internally and to the people we work with. And 1 company is with the same entrepreneur, and we killed that ID after, I would say, 6 months of running. We made a complete, do-over, and now started a different company with that same entrepreneur. No, it's not always that the entrepreneur leaves when the ID gets killed, but I do believe that happens in most cases.
How you were able to build such a great brand that you get a lot of interest from entrepreneurs. Really many entrepreneurs and people who are thinking about launching their studio, they say, oh, builders. So you have definitely a great brand. And I saw on your profiles with your co-founder that you are writing Medium articles, and I referred to some of your articles in my research about startup studios. I love them. You mentioned that you are going to publish a book. Is it true?
Well, you'll be the first to say that now. Well, let's start at the beginning here. I think Builders is a great brand because my co-founder Sharon, she has a real good sense of what is needed to get a brand out there, right? She has a lot of experience not only in the marketing side but also in the B2B content side. I think that's and foremost. From day one, we started building Builders on our own founder story, and also publishing, around ourselves what we thought is very valuable throughout our journey. I would say until 3 years ago, I didn't post anything on LinkedIn, right? I was a total lurker. And she basically convinced me, okay, but you have a lot of stories to share. Why don't you? And we turned that into a methodology where we have, just like with a big brand, we have a part of our team working on, our content schedules, the teams, whatever we'd like to put out there, but it's also structured. I love writing those pieces of content. That's something I do myself, right? It's not, somebody ghostwriting that for me. And I decided to do that from a point of view of a studio founder. Like, what are you struggling with? What's real? What's not? Because I feel like there's a lot of polished fairy tales out there on how it is to run a studio. And if you're not, did not exit for $1 billion, it's very, I wouldn't say complex, but it's a different layer of, entrepreneurship and doing everything. So I decided to share that journey. I'm now getting to a point I'm writing so many of these articles. Yes, we should bundle them just for fun. Maybe we should publish a book. Thanks for putting that in my mouth. But we do get a ton of value out of that. And a lot of incoming ERs reference a certain article they read, or a post we did, as that's the reason they're coming in. And these days, we're slowly also getting investor inbound for the same reason, right? And it's really hard to distinguish the two because there's also a lot of studios reaching out for, a coffee chat. Yeah, but it's starting to work out. And I wouldn't have thought that, right? So those kudos go, to my co-founder for now making it workable for us, right? Imagine trying to reach out to 100 people yourself every week. It's a full-time position. So really happy with that. And we decided to lean in even more. So we're going to build that to the next level. And internally here in the Netherlands, we also have a format called Builders Investor House, where we would bring our investors and outside investors together for an event where we would share our challenges, stories, and show them some scale-ups in the region. And we're also getting that to the next level. So yes, I do think the brand really helps to basically make the other things easier. It's not that you cannot focus on, the most important thing, building valuable companies, but it does help make the rest pop and easier, and also, convince investors that it's real, that it's not, a startup studio to a lot of investors is still a new term.
What do you think is great effect of builders? Why every year startup will be like easier to build and more success, more likelihood to success or to succeed? So what is the reason? Like because you know how to build companies, because you know how to attract great founders, or what is additional value founders get? So what do you think is like the reason for studios and especially builders to be on the market, not just like, I don't know, accelerators or VC funds, but also like what is the ultimate value of the studio for founders?
No, that's a great question. There's a lot, right? I think first and foremost, our studio is focused on the future of work, right? And we basically always say, we turn the daily grind into a joy for millions, right? So we really have this mission set for us. So that means that the entire infrastructure, resources, knowledge and everything we have is structured around that team. B2B, sprinkle of AI. So for a founder to start with that, first and foremost, thoroughly validating what they think might be the next big thing is something really powerful, especially if they're, walking around with it for, a longer period of time. They need to get that reality check. That alone, is a tremendous value. They could put that to work. The reason Builders has, I would think, way more impact or success, I don't know, say specifically like an other studio, but building a startup yourself or in the wild or with an accelerator, is that there's not a lot of pre-ID or, day zero builders, right? We have now day zero accelerators, but real startup studios building with you the idea out to like something that would really impact the future of work. Those are not out there. Getting a team that would complement, all of your skill sets is basically near to impossible these days. The talent has become way more expensive. The capital has become way more expensive. So those things don't seem to pan out in the favor of founders. So yeah, if you want to make it a more enjoyable process, why not partner with, I would say more or less an institutional co-founder, right? A group of people and capital that would get you to the pre-seed phase. And specifically here in the Netherlands, I would say some parts of Europe, we have this funding gap. Right, there's the talent and the funding gap, basically. So the talent gap, you have the core team to figure that out with you. But the funding gap here is pretty real. There are no tickets for, most founders between 0 and 400, 500K. There is a lot of tickets, million and up. And those things combined make it really hard to make the jump. And I would say if you've done it before, you also recognize, hey, I want to have a partner who could open up networks and make stuff easier for me. And in the end, makes fundraising also possible to begin with. Hey, it's rigorous validation. It's the core team you have. And it's, fixing the funding gap with some capital as well.
What advice can you give to studios who start and want to build the brand? So probably you didn't have it from scratch when you launch Builders, or you already have some, I don't know, hype about selling this, we are Builders, and launching new studio. So like,
no, I don't think the hype really helped us back then. I actually thought that the hype around that first exit was fairly normal. Look, my advice, if you're, basically, I feel like there's 2 studios in the first 5 years of a startup studio. There's the ones that are just starting out, and then after you build 4 companies, you'd slowly go into emerging studio. In those first years, the focus should be working with the right entrepreneurs, figuring out how to support them, get companies out there that actually work. And I believe on the brand side, the only content at that point is valuable is you telling about your founding story, why you're doing it, your scope, right? what has worked, what has not, so that you become more human. You're writing about your own struggles, failures, and successes, because this is not a straight path to success. A lot of it is, learning how to say no and fail fast, and then picking up the pieces and move on. I think that's the most important part to build that brand. I think when we did it, we already did 4 to 5 years of, corporate venture building and projects. So for us, it made a lot of sense to go big. I don't think you have to do it in the beginning, but I do think it inspired some other studios to do that a bit sooner as well. So my advice, to repeat that, is, be diligent on the founder content. I think that would be the best thing to do. Build up that audience, and then slowly build it up to, what you do with a company. Make it a, content calendar. Make it really valuable. But your number one priority is just to build great companies.
You emailed me that about the question what you do differently from others, that you involve team in improving the stage gate model and playbooks, and also you're using GPT for ideation process. So can you elaborate on this and tell?
Yeah. So like I just said, we now have a shape, gate, and process. We didn't have that before. So what we tend to do is, every cycle, every year, we would look at our own stage-gate model and playbooks and, talk to the team and say, okay, are we doing the right thing here? What do you guys notice or experience during this phase? Because you're so focused on getting to the next step, that's really hard to stand back. So we would do that every year with the team, review it, go over these deliverables. For example, now we scrapped a lot of deliverables from the first few phases of company building, which were related to growth marketing or paid advertising, right? So we pivoted to, in the beginning, going away more outreach instead of, amplifying it with inbound, because we felt like if we do that, we basically are not iterating on our ideal customer profile anymore. We're just assuming it's the right one. All of these things come from the team. We look at it, talk with them about it, and then start improving on it. And what was that first question, or that second question?
About using GPT for ideation process.
Oh, yeah, there you go. Ideation. Quite a tedious process, right? Let's say a founder comes in and he doesn't like your ideas, but you do want to work with that founder. So now create ideas. There's all kinds of ways and models and workshops for that. And most of those workshops involve Post-its. Little known fact is that at Builders, we don't really like Post-its. It feels like we're, doing a workshop or consulting on something, but we're actually building a company, you know what I mean? So I don't know. For some reason, we don't really like it. A while ago, we entered into, I would say, a trial out sort of exchange with another studio from Seattle. And they basically showed us what they would do in those ideation processes. And we adapted that to our model. So what we first would do is we would do ideation sessions for a week and would Post-it the hell out of everything. It would be some sort of a debate. And then, the overall opinion would be the IDs, which is already weighed out and thought about, which is not the way you should do that. These days, we would use that ideation platform to prompt basically, your one-pager, problem, solution, unique value proposition, addressable market, maybe even go-to-market, all of that stuff. You could prompt in this tool, and it would basically say, okay, so Max, you want to create a company, a B2B SaaS company in the health space. It's AI on this and that. It would fill in the rest. And it would also say, these are your competitors. You could also hook up some of your connections and say, hey, this might be great launching customers or design partners, or basically this would be great co-founders compared to whatever you have in your LinkedIn contacts. And you do all that with one prompt. The reason it's powerful is that now you move on to the next ID or to iteration of that ID, or change the prompt so that it all looks like you thought in your head. We do that and create around 30 to 40 of those, what we call sparks, basically one pages of a potential ID worth pursuing. And then with ourselves, within the team, and also with outside expert matters, like experts on HR or the sector we want to grow in, we would do blind voting, meaning that I would vote on those 40 IDs, sparks, and everybody else would as well. In the end, let's say a top 3 comes out of it, and the founder or the ER who we're working with would, tell us, look, this is what my founder story is all about. This is indeed the ID. It really fits my profile for that and that reason. I know how to go to that market, and that's now our starting point. And mind you, this takes less than 5 hours compared to, taking weeks to figure out where to start. Because as you know, as I know, if the idea is really good, it doesn't matter until you talk to the customer, talk to the market, looked at all the other things, if it's actually a great idea. But the GPT model does give you, hey, these market sizes, adjacent markets. It gives you all kinds of starting points to start your problem validation, basically. So it eases time up. I mean, it's 4 or 5 hours now, but I think it would save us 2 to 3 weeks just to get the right starting point. So really happy with that. And also really valuable, I guess, for any studio to do that.
I will ask then this magic GPT prompt.
Well, it's not a prompt. It's basically a platform. The guys at
platform.
and if you'd like to use it, I think they're open to partnering with it. It's from Pioneer Square Labs, and they're a pretty well-known studio, which they allowed us to use that with them. So really happy with that. But I think, look, if you're a good studio, can figure out how to make that prompt as well. I think there's a few of those ideation platforms out there right now. I think my main learning is you can now use your assumptions instead of, already trying to brainstorm why it would not work or what should happen. And I think in that case, it's not really relevant if you're doing ideation. And look, this only happens when, we need to iron out more IDs. Nowadays, the founders come in with their own, concrete IDs, unique, whatever. So then we wouldn't start at that phase, right? So it's for specific sessions and specific starting points.
When you said one question before about that you plan to go one level up with your content and brand and attracting founders, what did you mean? Like, what do you want to achieve by this, not acceleration, but improving in branding?
Yeah, so look, the overall master plan for builders is as following. We believe we should be able to create 2 to 4 companies a year consistently. That's step 1. Get some, exit or returns to make the studio run more, I don't want to say evergreen, but you know what I mean.
Independently.
Yeah, independently of external financing. Bring the studio to different European cities. So go to the places where the entrepreneurs are. Alongside also create a financing structure to keep financing the companies we've built, of course. And then, of course, somewhere down the line, build a company which is best in class. And to do that, I believe we could even go, one step further with how we're sharing on that content. We had thoughts on maybe sharing pieces of our playbook and stage gates, which we offered and got paid for before, but make that content publicly available. To other entrepreneurs who can use it for their own good, or are interested in partnering with a studio and figuring out, hey, this is how that works.
Can you tell about your business model? Like, how much money are you planning to invest in a company or have costs until it reaches some revenue which is able to attract external investments?
With every studio, the business model is a bit split, right? So there's the operational cost for the studio team. If you invest like us from a centralized pot of capital, a holding, then there's those cash outs, basically. As a studio, goal is to build as much of those companies. So work with the right entrepreneurs and set those up. With builders, it's around 33%, like 1/3 of the equity we put on our balance sheet. And then we would invest twice 150K into those new companies we incorporate. 150K at incorporation and 150K a bit later. So in total, 300K. From that 300K, we tend to spend half of that hiring back our own core team. and that core team is at cost, right? So almost, I would say, near the same as you would hire them yourself. But now they're experienced and they're an oiled machine. So that's basically how far we would invest. From that point on, we're raising external capital. So 300K in, we should be ready to get some extra in. That doesn't mean we're raising at institutional partners right away. It means it's other syndicates, angels, or other forms of financing can come in for the next step, and then we would go institutional.
Your experience of fundraising before when you just started the studio, so was it easy to attract this, you mentioned 2 million from investors when you launched Builders? What did you do during this process?
Well, of course, first and foremost, we put in a big portion of our own capital in the first, I would say, year and a bit. So that really helps to convince people that you're serious about this. I think that's really important. It's not easy. Right, the persona for a studio investor in a holdco construction is somebody who will invest 100 to 250K in the beginning. Right, later you could go bigger tickets, but that's the typical persona. Those, of course, 2 years ago need to be convinced what a studio even is. These days, we've noticed that they know what a studio is and what they're looking for, but back then it wasn't so. So was it hard to get them to invest into the studio? Yes, because we're basically giving them a portfolio of companies, and they don't have a say in which companies get built. So they're de-risking, yes, but they're also at that point not using their own knowledge as they would do previously. And it's a bigger ticket item for the local ecosystem. So those kind of tickets could go into a VC fund or a studio. So for maybe a US studio, it's a bit different, but here it's basically the same ticket size. What we did learn, though, amongst raising that 2 million external capital, is that we now have a way to involve the investors into our process, into the things we do, and also get them into like a community together to also empower them to get more value out of this. So we did find a way in the middle. And I would say it hasn't been easy to raise that 2 million because the companies you build, they're going to prosper in around, let's say, 1.5, 2 years from incorporation. And in the beginning, you're not there yet. The proof points come later, and you need basically 4 years of runway to get to your important proof points. There's a lot of founder conviction here, just like with any startup, for them to invest in myself and Sharon in our team, right? That's the hardest part of this. It took us now almost 2 years to raise that whilst we were building. So it almost goes parallel with the amount of capital we're spending as well. I would say it's almost a full-time job.
Both co-founders, CEO and CTO get also 33%, right?
At this point, that's the go-to, but we're not strict on it, right? So if a CEO comes in, we find a CTO, and you look at network experience, whatever, and it feels like hey, the CEO should have a bigger piece of the pie. We're totally okay with that. We just have the conversation basically, right, around who should and why at the Incorporation. I do think it's important to note is in the beginning, at the very beginning of when starting with partnering with the ER, we do talk about terms, right? So we do talk about the fact, hey, this is the equity the studio is actually expecting if all goes this way, so that we're very clear on these points. And I think 9 out of 10 times would be split halfway because it's hard to have that conversation at that point. But I do see a lot of other studios doing it. The CEO has a bit more than the CTO, which makes total sense to me.
Can you also learn and remember the biggest learnings and mistakes you did during these 3 years? Like what you changed in your model?
Yeah, sure. I don't mind. I think the biggest mistake or the easiest mistake to make, you're working with founders, of course, very charismatic, and also you believe in them, you put your trust in them, you're partnering with them. So in the beginning of the studio, when you only have 1, maybe 2 founders in and around your studio, those are the ones you're focusing on a lot. It also means is that it's very easy to go with the flow there. and not stick to your, stage gates. Invest a bit more here, spend a bit more time there, try to figure it out. I think my biggest mistake has been not to say, earlier in that process, no, this is not going to work out. We need to pivot, we need to change, we need to adapt. And the reason for that is twofold. Look, if you're not focusing on your next company or building out your studio, the best thing in the world is what's right in front of you, right? Those are the founders you're currently working with. That's a really big mistake, not sticking to your own stage gates. We combated that, by the way, with creating a sort of scorecard internally, which gives us some oversight on what we're doing for ourselves. It's not something, we do ourselves. The founder sees it and fills it in. We use that for ourselves to make sure that we say no at the right times. And then I think second learning would be is that in the beginning we would invest all of the capital at the incorporation of the company, and we used to invest 500K, which I also think, I'm not saying it's wrong because I don't believe trans funding is specifically needed, but it just gives you some sort of hard, gate or deadline. And I think that was a big mistake because some ideas just don't need to, be built. They need to also, have a willingness to pay for what you're building. And the capital side of that is a big push. If there's money, you will keep trying, right? So I think those are two really big learnings we had. And when starting the studio, we also took one other company in the studio. Didn't really start there, but it was already running. I was involved. We got it in. I think in the end, it was also, I wouldn't say a mistake, but it also distracted us from getting the machine up and running, learning from your failures and successes. And in the end, a studio, just like with any other thing, is, where you say no is where the success starts. It's not about, saying yes everywhere. I think those things are easily made.
If you have something to share more, maybe you have some ideas that, like, I want on this podcast to cover some more topics. You say to me, and we can talk more because we have time.
Yeah, sure. What would you like to talk about? What's important these days at the studio?
Yeah. Let's take this first question. Like, what's important? What do you think is important for studios? I would say, from my perspective of view, that it is very important for the whole studio ecosystem to have some standards and to some education to investors, so that everyone understands that it's not just a passive investor with 30% of equity on the cap table. It is a studio. This means double chances of success, plus faster traction, plus they're really co-founders, institutional co-founders. They're not just invested as a VC firm. So I think that standardization is needed for making it going from early adopters to early majority. So to cross the chasm.
Yeah, let's talk about it a bit more. All right. So yeah, I do think startup studios, venture builders, venture studios, they come in all shapes and forms. Right. And it's not just, let's not over-index on what their process is or what their playbooks are. Most investors in the end are looking at the structure of the thing, right? Can I, do I understand what I'm looking at? And I've been involved in a lot of legal counsel groups where we would, aim to standardize what a studio is. I think we got to a point where we're pretty similar on structure, right? So there's a few sets everybody believes should work. And I think the most important thing to note there, and I also like to congratulate you on that research you did, because I think you saw that very clearly, is that the path to success for studios, it depends really on your background. So let's say for now you're successful, but you don't have a 100 million exit, right? I think the logical steps for standardization is that studios always start out as a holdco, or SPV, or whatever you like to call that. They try to build their first, let's say, 4 to 5 companies with the capital in that holdco, maybe with a bit less equity than they'd like, to show that they're able to do that. investors could get on board, not just before the de-risking and the speed of that, but also just because it makes sense as an investment, right? They're getting on the cap table with a spread and some advisors on the sides. The thing is, if you, as a studio, want to then succeed further, you want to get, real big investors in. They're looking for something that has oversight, that has some sort of standardization, and gives them different protection than an entrepreneur might think of. It's more on the legislation side. It's more on, I need to put it in this box of my portfolio. It needs to fit. So after those, let's say, 4 companies, 2-3 years, slowly transition, in structuring into a fund. And then another type of investor can look at it, right? So for the first part of the emerging studio, it's high net worth angels, with an exit, with a background, ability to help. And for the second part of your studio, you could, consider building a fund, which they now call the dual entity model, that could have normal standard rules, like 2% management fee, 20% carry, and get investors in there with bigger ticket items. And what you would do is, of course, show your successes from your holdco, why it makes sense. And that first investment you would do would probably be in your portfolio or in the studio, so that you also have that up and running already. So I think standardizing the route to success would be very helpful. Assuming that a dual entity model from the get-go would work, I think, is a bit naive. It's assuming that you know how to build those things already. No, you first need to figure out, how can I do this repeatedly with a team that knows how to do this in parallel or serial, whatever. And once you've proven that, go to that next phase. So standardization would come basically from that, I would say, from the dual entity side. That's where the standardization should come. Before that, it's a lot of risk for the investors to take, but there's also a lot for them to gain, right? So if that thing would work, they would profit from that, for the length of the studio runs. It's open-ended, basically, right? Yeah, I think there's 2 types of investors, and as long as we recognize that, I think we could go into sort of standardization and compare those. But as long as I know of 2 studio funding funds. As long as there are not a lot of funding funds doing this, it's really hard to compare, right? To compare the one to the other or force standardization. And, there's a trend that these things are coming. There's SPVs, syndicates, and funding funds booting up. So that should help the industry standardize further. But it might take, a few years before we get there.
Thank you, Michael. Great story of Builders. Very happy to record this interview with you.
Right.